Good afternoon, traders. This is Christian Primehurst, Tropical Trade Group, and this is your end of day market and chart recap for Wednesday, the 10th. Well, I think we had something for everybody today. Definitely one of those days where you can say, wow, this was an interesting market. Very, very whippy. All kinds of price action, a lot of pretty dramatic earnings moves as well. And overall, I would say weak breath once again for the market. But if you're an active trader, there are things that you can capitalize on. So I'm just going to write this in here before I forget to do it. And I think what's kind of interesting, before we even look at the day's performance, by the way, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. But if you look to the right of your screen, and I've got a few ETFs, the major ETFs, and what they've been doing month to date. I can actually turn this into I like to do this. I can connect this, of course, automatically, but I actually like to go through it manually because sometimes it just alerts me to what's going on in the market. But the Qs are now outperforming for the month to date. They're up close to 1%. They have definitely been the leading index so far in May, and we'll go through that chart in just a second. But the mid caps, small caps, they are just not participating in this market. You could see actually the mid caps, which are usually like sometimes forgotten about. They're kind of like the middle child. Sometimes they're forgotten about and they actually excel, but they're actually underperforming pretty decently. That's the only one that's actually down over the last 5 days. And of course, look at the Qs over the last 5 days, up 2.5%. So more dramatic there in the last 5 days. And then what's really interesting is when you get to the ARK Innovation and the IBD ETF. The ARK Innovation ETF is up 12%, right? So you would think like, oh, geez, maybe this is breaking out when you go to the chart. So I just thought we'd start the video with something a little bit different today. But no, it's just basically a move back from the lows. And like, would I go long in this with this particular chart here after an 11% move into the 200-day moving average? No, I would probably sell it, for considering that bounce in a downtrend. But it's just crazy how this market can move like this. That's where you're getting the outperformance this week and for the month. And the IBD ETF is doing okay. The IBD 50, that's up 2.4%. So that matches the performance of the Qs over the last 5 days. And of course, value is right there too, VUG, and value not really kind of absent, and it's kind of funny. I think that you would get more, I think when you, talk to some traders, more traders who are focusing on growth, like they're seeing some, definite bright spots in this market. If it was the other way around and if value was outperforming, like if value was up 2.5% or like 5% over the last 5 days, you would probably be hearing from those traders saying, hey, there's not a lot of great setups going on and I'm frustrated. I'm not even seeing any good things going on, because it's just funny how, there's a lot more traders that live in that growth type, area of the market. And I always say it's important that you can trade either one of these. Like, you're not limited, right? Unless you're running like a growth fund, right? You're not limited to what you trade. You could trade any part of the market that you want to, and you don't need to be bogged down as a value or growth investor. You can do whatever you like to do, right? And that's the advantage that we do have as retail traders, is that we can go where there is momentum. So I mentioned weak breath, right? And so of course, like, the Dow was at one point down 1% today. The Qs went all the way back to almost flat at about 130 today. And the SPY was kind of caught in the middle of that, and that ended up 0.5%. So you go through some of these moves, and bonds were strong today. I could probably put that in green there. So that was a nice move in bonds today. We can talk a little bit about the CPI report. Don't forget, tomorrow you're going to get the PPI report as well. So, I think that that's going to be another data point that could possibly shake things up. But yeah, I didn't think that this number was really good. This market kind of took off at pre-market and really rallied into the open. And the way that I was kind of looking at it was, I was like, okay, maybe the market's rallying on just the fact that the that the expectations were not really good going into the CPI report. But if you look at the annual, or sorry, not the annual, but if you look at the number for the month, like 0.4 is not a good number, because if you quickly do the math, that means that point four, of course, times 12 is 4.8%, and that's way above what the Fed's goal is. So we don't want to see more months like this. Now, again, 1 month is not a trend. One data point is not a trend, but people were so focused on this number, the year over year number. And again, like I say this just about every time we get one of these CPI reports, but this number is just looking back a year. It is what it is. It's the year over year change. So by definition, it's just looking a month, not a month. It's just looking a year back. So if you want to play devil's advocate for a minute, and whether or not we're going to get closer to the Fed's goal of 2% year over year, take a look at the changes that have happened over the last 12 months. So look at the forget all of this here, but just look at the last 12 months, right? So we're backing out the last April, which is 0.4. And yes, as long as the inflation kind of stays, let's say it comes out with like a 0 for next month, or 0.2 or 0.4, it doesn't really matter. As long as look at these high readings that we had back in May and in June. So yes, inflation is going to come down, but just because we're backing out these last 2 months, by the time that we get to July, and I've said this for a while, if you're a regular viewer of my videos, you know that I've been talking about this phenomenon for a while. So the fact that people are so focused on this year over year change, really the data point that I think, again, I'm not this is not what I do on a day-to-day basis. I don't trade the CPI. But you really want to be focused on what inflation is doing going forward. Like, so what was the last data point, which is still kind of a stale data point. But if you're looking at the year over year, it just is the last 12 months, right? And you could just quickly add these up, and it's very close, right? It's not, of course, the addition, the exact addition. But if you do add up the last, literally the last 12 months, you're going to see that it's very close to that year over year. And of course, these 2 months, once we get past them, you're going to see a 2% drop in inflation, and everybody's going to say, oh my God, this is great. And we're just simply backing out those last big 2 months, right? So it was a big deal too when we got past March, because that showed a 1% increase, right? So that's my little commentary about the CPI report, and overall, like I just didn't understand why the market was rallying based on a pretty bad number, other than it was just in line. Again, expectations are always the important thing. So PPI is tomorrow. Sorry for the discussion on that. Let's get back to some of the movers. So I wanted to go through a couple trends that we're seeing. I mentioned bad breath. If you want to look at the new highs for the S&P, right? I mean, there was 18 new highs and 11 new lows. Okay, so that's not that bad, right? And if you look at some of the names that are making new lows, it's things like Tyson, Mosaic, so there is some commodity type names in there, names like Dish, right? Which I'm surprised Dish and Newell, these are underperformers. PayPal did not have a good earnings report. They continue to fall. I think they missed on margins. So, there are some bottom of the barrel names in here. 3M, which has been an underperformer. Met, I'm not sure why that one's in there, because I didn't think that that's too bad. LUV is the worst run, probably arguably the worst run airline. So, this kind of does make a little bit of sense. What is not particularly good, and by the way, you can look at some of the names, there's a Pepsi in here, there's a Salesforce. These are pretty well-run companies. Or, we've been seeing the auto names continue to be on there. Cintas is a new name. Lilly, which has just been a beast, right? Oracle also, CPRT, another auto name, right? And Boston Scientific. So what's particularly not good here is when you look at the S&P and you look at the names that made 4-week new highs, right? So this is just like your monthly highs, right? There's only 45 names that made new highs, and 54 names made new lows. So that's not particularly good. And I even have to scroll to see all the names in here. So we continue to have what's called bad market breath. Let me just pause this 1 second. So remember, from an overall market perspective, we want to see more names that are expanding, right, versus contracting. So this is a bit troublesome. But as I mentioned in the beginning of this video, that there are some areas that are continuing to act pretty well, right? Software names were at 1.4%. Cyber names had another big day. Zscaler, Datadog, these things are continuing to move higher. Biotech, right, and clean energy got into the mix a little bit today too. Those names got a little bit of a move. Solar was up today, but yeah, look at your internet stock. So yeah, the bigger names, right? These bigger FANG names are looking very decent. So let me go back and I didn't go over the S&P chart. I just want to spend 5 seconds here because there's not much really new that we can say other than we continue to explore both sides of the valuary. And I'm calling this the triangle of death, right? Until we break this one way or another. But it's very difficult to say which way. I mean, there was stronger volume today, but that's just because I think things were really kind of volatile. And the Qs, which again, look like they might be rejecting a move higher. Actually, it looked like there was heavy buying there middle of the day. I mean, this is pretty crazy. We were talking about this. I had to do a Twitter space at 1 o'clock, so I wasn't really trading this first move, but we held where we needed to. We came down and we tested the bottom of value, and we turned on a dime here, and just very impressive, like V recovery for the day. I don't know if there was a news. I don't think there was a news catalyst for that. It just looked like somebody was taking advantage of this and buying some names. So yeah, if you go through, of course, the bigger names like Microsoft made a new high today. Google had a monster day on their event. They almost took out that Virgin point of control, but I think a lot of people were looking at this consolidation and waiting for this to resolve higher, which it did today. Even Amazon, which I think is kind of out of the bunch, did not have the best earnings out of that group, but they're even back above the 200-day moving average. That's something that has been very rare for Amazon. Every time it's gotten to this 200-day moving average, it's gotten rejected. All right, so there's a few names. A couple names that I've been in is Salesforce had a nice day today, up 1.8%. Again, I'm looking for Salesforce to get up to that 213 level. Oracle is another name that I got long towards the beginning of this. I think it was the beginning of this week. That name's been also, I think this is one name that I'm definitely paying attention to tomorrow because this looks really good here, right? You had two little inside days here, and then a nice counter move back up to the upside. So I think that looks pretty good. I mentioned biotech, that did get over that red line. So really strong performance. And again, you're seeing it through like the smaller names other than Eli Lilly, which I mentioned, but the TJTX looks pretty good. We continue to see some call activity in that one, as well as this Apellis Pharmaceuticals. This thing was up another 2% as well. Again, we're seeing these little deals that are happening too. And then some earnings names, right? Of course, the Celsius, I mean, pretty amazing, got up to 134 today. And you got a really nice breakout, and this could be a real nice stock going forward. Would love to see it if we get a couple inside days to kind of digest. Toast was a name that you've heard me talk about in the last couple of videos. Specifically, I talked about this 2 days ago, talking about how this would be a good play for earnings. The name was up 8.5% today. I think it gets up to that 20 to 42 VPOC. Exact Sciences, which was a name, so EXAS, this was a name that I put out on Substack in the beginning of the week. I mean, look at how the consolidation was on this thing, really bottled up. And once you get some positive news on a lot of consolidation like this, it's up and away. This stock was up 10%. Other, so again, like it's, even though there's bad breath in this market, and that's concerning, I mean, look at some of these names that have come out for earnings. So, I mean, this is really constructive. So my overall thought here, I'm not going to go into too many more names. I don't want the video to be too long. Rambus is another name that I'm watching for tomorrow. Notice that trend line, perfect trend line that it's got to get through. It also has to get through this $50 VPOC that's up here. here, but provided that it can do that, it's a pretty constructive looking chart. So, you know, bottom line, if you're finding some success with some of these names, you're doing, you know, you're doing a very good job. But overall, I think, like, you know, being patient with this market and understanding like how whippy it is, and so forth. You know, what helps when the market is just, you know, getting rejected at highs and, you know, comes back to the lows, and it is being bought, is just to reduce your position size so that you can roll with the punches, and be very flexible in this market. I know that I've talked about that before in these videos, but you know, that's the best medicine for a really whippy tape, right? And not to get too anchored to any of your beliefs, right? Continuing to kind of adjust to what this you know, crazy market is giving you right now. All right, guys, that's it. Have a great night. Hope to see you in the trading room. We start our TTG starts our trading room live session every morning at right around 9-10 in the morning. We go through a bunch of charts and all the macro stuff as well. Have a great night, everybody.